This is Eric Muathe with Muathe.com. Let's take a look at our wedge wave cancellation setup. And what we are looking at here in a live example is a stock that went through this similar progression where we have a wedge here. And we are going to show you two wave cancellations on the top line there and a wave cancellation on the bottom line. And we're going to see that after this wedge, we had a breakout that took the index to new 52-week highs. We see that the stock, now what happens in this example, we are going to see that our wave cancellation line is accurate because the stock or the index is going to come here, bounce on this line here, move fresh 52-week highs, and then once it breaks back below this line, it's gonna show that this was a perfect time to get out of the stock or the index. Also, it's gonna show that the stock could not move above this line, and every time it hit this line, it was good for a sell-off. So let's take a look at that live example, and it is for IBB in the 2008 time frame. And you see that had we drawn the wedge using that high and that high, we get this buy point here, okay, which happens to be this area here at about 80, 81. That would have been your buy point. That is if you don't include the wave cancellation. If you include the wave cancellation, which is this area here, where you see that that is equal to that level on the wave, so that cancels out, forming a straight line there in theory, and you see that it hits that high, that high, that high, and that high. So that makes that our wedge is connecting to as many points as possible, which makes it a true wedge. Also, you'll notice on the lower line we have adjusted for a wave cancellation because that area cancels out with that area there. Let me take that off so you can see it. So we have a wave cancellation there, so we have this nice wedge here. So when the market breaks out there, you see you get an earlier entry point there, which is at about 78, 79. If you take a look at continuation of this top line here, you see that the index bounces off there. Hope you can see that it bounces there successfully and makes a new 52-week high after that bounce. So that confirms that our wave cancellation line was accurate. To confirm that our lines were accurate as far as the wave cancellation was concerned, notice that if we take the lower line here and extend it, not only does it show us a support line there, which took the stock to a fresh 52-week high. Once this line is broken here, the break of that line also corresponds to the best time to have sold this stock at about 89, because the stock would go and drop as much as 50%. So that would have been the best time to sell the stock because it broke down below that lower wave cancellation wedge line. Okay, also take a look at what happens is once it breaks. Now let's take the top line, this line here. Once we break down there, that corresponds again to this area about 86, which would have been another sell time on the stock. So that area, once broken, confirms that the wave cancellation wedge line was accurate right there, and the stock would subsequently give back and lose a lot of ground. Also notice that in the subsequent resistance levels here, which are shown by the arrows, that became resistance and that became resistance, and both correspond to that area, which was a sell point, and this area here, which was another sell point. What that shows is that our wave cancellation was accurate and would have helped you in and out of the stock over a period of about 9 months or so. This is Eric Muathe with Muathe.com. I shall come back with more wave cancellation examples. Peace and blessings.